You know, one of the biggest trading lessons I ever learned, if not the biggest trading lesson I ever had, was to understand that my individual stock trades don't operate in a vacuum. They're really mostly moving in line with what the big major indexes are doing, like the S&P and the Dow and the Nasdaq. Understanding what those guys are doing gives you a clue as to why your individual trades are acting the way they are. Your individual stock trades are like ships on the ocean of the major market indexes, so you need to know the tide and current of the market to successfully navigate your way to trading profits. Are we in a bull market or a bear market? What will happen to your trades this week? Don't get caught out and don't miss out. To understand the charts you're about to see, get your free video course and manual, plus many other free bonuses at stockgossipfilter.com. Now let's begin the show. So let's kick off as usual with the big picture, S&P 500, the weekly chart. Our market closed on the 6th of April, and here we go. So the long downtrend of 22, just as a recap here, snapped, that downtrend broke, and then the market has been in this kind of transitioning mode. And as I've been saying for a few months now, it does want to go higher, this market, and you can feel it, because you think about the bad news that's happened lately, the banking crisis and the Federal Reserve keep going on about inflation and interest rates. So despite that, it's done what, there's an old Wall Street axiom, and it's correct for once, and it says the market likes to climb a wall of worry, and that's what it's kind of been doing here, just slowly but surely climbing this wall of worry. And the result has been this all-important moving average here, the 40-week moving average, is starting to curl up, and the market is nicely above it here as the 40-week moving average is curling up. You know, this could be the start of a brand new bull run. If so, it'd probably be later in the year, but meanwhile, it's interesting to get in early, and you can see the tide is turning, interestingly, just at the point when a lot of amateur investors are throwing in the towel, which is usually the case. They're always doing the wrong thing at the right time, and vice versa. Let's check in with the short-term chart here of the S&P 500. We had what's called a golden cross here. I always explain, though, that in the immediate term, that actually means lower prices ahead, and that's what happened. A little bit lower than I'd have predicted, though, but bounced up nicely here. And I did explain last Sunday that the market here, I was remaining bullish on it, but that it was stretched, and that turned out to be a good call, because the market just kind of made it just even through the week. It wants to go higher, but it's running out of breath. We can look at the RSI here, and you can see that uptrend is intact. I'm going to more of the same this week, really. I think it's just going to try and hang in there and try to push a little bit higher, keep catching its breath and so on. And every other indicator I look at is kind of agreeing with me on that one. Let's check in. The other thing I always like to mention, it seems weird, I know, but the lunar cycle. I did a recent test on this, and this is correct about 4 times out of 6, which isn't bad for such a wacky indicator. And when it's waning, which it's doing right now, then that's typically a bad side. It's got another week of that. The Dow Jones, all the indexes need to agree with each other. The Dow Jones has actually been the leader in the pack, and that moving average is also curling up nicely. Nasdaq, as I explained recently, technology is the sector to be in right now, and that's reflected in the Nasdaq. All the beaten down tech stocks like Meta and so on making a great comeback, curling up the moving average alongside with it there. So once again, I'm going to say that this week is a transition market, or a fox market, as I like to call it. It's neither a bull or a bear. It's transitioning into something, and we don't know what yet. So the big picture remains the same at the fox market. Short-term picture for the week ahead, I'm going to have to go with bullish, a cautious bullish, because the bullish in the short-term way that he's kind of running out of breath for this run a little bit. But if you just hang in one more week, then I think it really will be having a great couple of weeks ahead of it, which is good. Really hit home the rally. There's one more chart I just want to home in on for this week, and it's an interesting one, and it's the 20-year Treasury, because this is a lot of what to do with interest rates is. It isn't so much as an inflation problem the Fed is facing as an interest rates one. When this gets too low, nobody's buying American bonds, and so they need to raise interest rates to make them look more attractive. And that resistance line here just broke this last week. So this could be the end of interest rates rising as treasuries, 20-year treasuries finally start rising. And actually, that's not a bad bet actually for even a trade. And if you really wanted to go for it, you could be looking at something like shorting or even buying put options on TBT, which is like a inverse of the 20-year Treasury times 2. So anyway, just leave you with that thought, and I will speak to you next time. I appreciate you giving this video a like, and don't forget to subscribe or you could miss an important market call. Next up, a free webinar, how to read stock charts and trade stocks, so you'll know what I'm looking at each week and why, as well as be able to trade your own stocks. I'll speak to you next week.